Hello friends, welcome to my channel and thanks for watching this video. Friends, we have ended with one more good week in the Wall Streets, and I would think that this is one of the opportune time to discuss about the market, because it's not only another session of a USA weekly market report, but it's all about interesting things which are about to happen in a matter of 10 days. So let's quickly analyze the Wall Street and let us see what has happened and what will probably happen going forward. So welcome to this session, but before that, if you haven't yet subscribed my channel yet, just hit on the subscription button, also hit on the notification bell along with the all button to get my updated video notification. Now let's start with the most important news. Now we have seen how Meta has performed. Now I don't want to be the company analyst or business analyst. I would like to say only one thing, that this is a completely new thing. This is not a new concept. Concept wise, it's already been there, and there are lots of movies that you have seen. So if you are a sci-fi lover, then you would have seen lots of movies on the metaverse. But you know uh, going now, you are going into that, and if you want to do something, that's the kind of access that you will get. So it's a concept that is developing, and let us see what will happen going forward. And if you believe that the company will survive with the kind of information they have, I mean, this is phenomenal. So that's up to the individual and his or her thought process. Apart from that, the Fed meet. We have a Fed meet in the first week of November, so that's already an important event, and it's not about how much they are going to raise. Most of the market participants have already factoring in that there will be a big rate hike, but what's actually matter is the commentary. And what we have seen, that the market stop reacting to all those price movements, and they are mostly focused on what's going to happen forward, because it looks like most of the uh, interest rate hike has already been factored in by the market, because for the last 2 or 3 months we have seen a rate hike, then a market rally on the upside. Apart from that, I don't know whether it is there or not. So everybody knows that Elon Musk has already taken over Twitter, and it's going private, and it is happening just 10 days before the 2022 midterm US midterm elections. So this is going to be very interesting, and do let me know in the comment section what do you think about this takeover by Elon Musk, and whether it will have any impact or any big impact in the election results as well. Key inflation gauge for the Fed rose 0.5% in September, in line with expectation. I mean, see, these are all economic numbers. Those are very important, but stock market has its own way, and it's rising with a different kind of price move. Okay, so that is something that you are going to see. And US pending home sales fell 10% in September, much worse than accepted. I mean, this has just started. If there is a recession, obviously, and I think there is a recession, and when I'm saying recession, just understand one thing, I'm talking about economic recession. I'm not talking about stock market recession. Those are different things. I mean, stock market recession is only one thing, where the stock and most of the stocks started fallen down, and we have seen all the bad stocks has fallen 90%. Good stocks has already been fallen 60 to 70%, and Nasdaq is one of the prime example for that. So beyond a certain point, if you think that stocks are going down from 100 to 0, that's not logical to think of. I mean, there are bear mongers who can say that this is just the start of the bear market. I don't understand this concept. I mean, what do you think, and what are you expecting? I mean, if you go by their logic, it looks like Apple will go down to 0. So this is the kind of logic they will give, and I don't know how much or how much not. If you are getting a good company at a reasonable price who has a good business model, obviously you are not bothered about the market momentum. I mean, if you are a long term investor. Apart from that, Europe's not out of the wood despite gas prices falling to a 4-month lows. This is different, and winter has already arrived. It is approaching, so we will get to know after 2 months. Okay, we'll definitely get to know after 2 months what will be the situation. And it's not about the demand is coming down, because that has a different repercussions. It also about who is earning, how much they are earning, and whether they are able to pay that price or not. Because if they don't, obviously they are not going to, or they will cut their gas consumption, and that is very dangerous. Because in most of the western countries, winters are very harsh, and this comes down to survival. Okay, so I mean, this is just economic data, but whether it translates into the actual scenario or not, that's a very different thing. So this is these are some of the mixed bag of numbers, and the most important number here is Dow closes 800 points higher on Friday. Obviously we will going to analyze those things. So these are some of the things. So do let me know about your views on metaverse. What do you think about metaverse in the comment section? Then the impact of Twitter takeover and its impact in the elections, not only in 2022, because we are about to end at the end of 2022, but we have election which is 10 days ahead, and we have another election which is 1.5 years down the line. So this is something big which I personally think. So do let me know your comments or your views as well. Now let us go to the market and let us see what is happening over here. Before talking about the equity indices, which has performed quite surprisingly on the upside, and that's very positive. But what I want to discuss first is the yield, and you can see the 3-month and the 30-year, they are very close to each other. I mean, just to talk about that, US 3-month, if you want to compare these two, so this is the 3-month, okay, and if I may compare it with US 10-year yield, you will get to know the picture. Let us see. Yeah, so you can see, you can definitely see what's happening over here. Okay, you can definitely see what's happening over here. And I mean, let's go to the last couple of weeks or months, and you can clearly see, okay, you can clearly see what has happened. So there is a crossover, and if you don't consider this as a crossover, it is just both the interest rate are entangled with each other, and this is not correct. Okay, in terms of economic perspective, this is not right, because this simply shows that there is an economic recession down the line. This definitely shows. I mean, that's why I've been saying this for the last 2 or 3 months, that I would like to see 3 months and 30 years, because most of the like 1 year, 2 year, 5 year and 10 year, they have already risen a lot. But when 3 month move, and it takes, or it closes in line with 30-year yield, then this suggests that there is a high risk of economic recession. And then again, I will I'm going to say the same thing again, that don't compare or don't mix it up with the stock market recession, because stock market, I think it has already factored in most of the things, if not all. Now let's go back to the important thing. Dow Jones closed very strong, 2.6%, 800 points. Then Nasdaq nearly 3%, and a cumulative impact on S&P, which is 2.5%. And you have seen Dow Jones is strongly holding on to its gains, and that's because these are all old economy companies and most of them are cash rich. Okay, so the indices is getting that premium, okay, where most of the investors are now moving into the defensive stocks which may not fall big, like the tech sector or the AI kind of thing or concept based business. Okay, so that's something you need to understand. But Nasdaq is not far away, because once Nasdaq started moving, we know it can move 5-10% in a single day. So that's the kind of indices it is. And as I told you, we have just 10 days away from the big event, and market is going to surprise, and surprise big. That's for sure. That's definitely going to happen, and that is something we need to look at very, very closely. Okay, then gold is doing very poor, I would say. It went up, it went down, and it went up to 1680, it again falls down to 1650. So it's unable to find its base as of now. Apart from that, VIX has started falling again, and it is at 25.75. Once it started trading below 25, and once it moves towards 20, it would be a good sign for equity market, and you will see big rallies in the broader market. Okay, it has just started, or I would say the broad market rally has already been started. This is my view. You may or may not agree with that, but do let me know your thoughts in the comment section for that as well. Apart from that, the dollar index has crushed like anything, and from 114, to 110. So this is something which one should look for, and it actually, or it literally translate into the stock market rally. Now let us see what DXY, or what dollar index is saying, and what it is indicating. Okay, so DXY, because if you understand the movement of dollar index, you get to know, you understand how the equity market is going to perform. So this is what we have here, and we have seen the indicators have stretched a lot. Okay, and this is what you can see, from nearly 115 to it fall down to 109.5, and now it is trading at or near 110. Now if you look or analyze the chart, okay, if you look or analyze the chart, what you can see over here, let me show you the so this is the chart. Okay, and if I may draw a line like this, you will see that the support that we are looking here is nearly 108 or 108.5. so it means there is much more to go on the downside, and if it does not hold at or above 108, then it would be a problem for currency, and you will see it will translate into a big stock market rally. So I am telling this thing for the last 1 month, that if you are a bear, if you want to short the market, be very sure, until and unless you are a pro. If you are not a pro and you are just an retail in kind of person, so don't try to do some things which you don't understand, otherwise you will get crushed. One day of big short covering and you will wiped out with all your money. So don't try to do this kind of dangerous stunts in the stock market. Okay, now let's go to Dow Jones, and I have been saying this for the last 2 weeks. If you are watching my regular videos on USA Weekly Market Report, for the last 2 weeks I have turned my view, and we have seen, and there is a specific videos where I have said that if Dow Jones does not sustain above 29,000, then it will be a big downside, and we have seen from the lows of or in between it has made the lows that it has made somewhere in between 28,500 and 29,000, and since then we have seen a staggering kind of rally. The close we have seen is nearly 33,000, so it means there has already been a rally of nearly 3,000 points. And if you are looking at the trend, if you are looking at this is the weekly chart for Dow Jones, so if you are looking at it, you can simply see, okay, you can simply here we are, so we can simply see a big move on the upside, and it will be somewhere in between 40 and 45,000. Probably it will take a couple of months. So this is what one should look for, because the big rally has already been started. And similar with, now in this video I will show you what the long term chart of S&P 500. I've received some comments that about S&P 500, so just for the sake of information, and this is for the long term, for the next couple of years, okay, for the next couple of years, let me show it to you how to look things in a very simple manner. And for the next couple of years, if you are tracking down S&P 500, what you can see is something like this. You can see a trend line on the downside, 1974, 1982, and we have 2009. And what about the upside? I will draw a line like this. I will not do anything, okay? And if somebody says that if this happened, if that happened, so you have your own thinking, keep on thinking, and one day you will lose your edge, energy and time by thinking unnecessary things. That's what is going to happen if you are thinking unnecessary things. So if you are looking at the long term chart of S&P 500, so with a support which is in between 1765 and 2400, what I am looking at is the big target which will be in between 13,300 and 26,000 in the upcoming years. As I told you, this is for the next couple of years, maybe 3 to 5 to 7 years. We will get to know how much time it will take, but this is what actually I am looking for. Okay, as I told you, if you have any arguments, please let me know in the comment section, because if I find some logic, that would help me, okay, because I want to know from you guys as well. But if you just thinking by yourself that because you have taken some short positions and that's why market should fall, then you can think whatever you want to, nobody cares about that, okay. So that's something you need to understand. So this is the S&P and long term target or long term trend for S&P. I hope you find it very simple and easy to understand. Apart from that, let's go to see and check out Nasdaq, okay, because that's where you get most of the meme stocks as you may call it as. And Nasdaq has started moving higher, and this is a double bottom kind of pattern. We just need to make sure that this level must hold, okay. So that's very important. So that's why I'm not going to do things like I have done with Dow Jones, where I have drawn the entire trend line, but I need to make sure that Nasdaq has completed its correction or not. And for that, what I'm going to look at is the important support levels that Nasdaq has made, okay. So what are these levels? We have 10,690 as our immediate support, and we have 10,000 on the downside, which is going to be your stop loss. So if Nasdaq started trading below 10,000, it will turn negative again. But if it continues to sustain above 10,690 or 10,700 or more, the next couple of targets will be 13,200, then 14,650, and the big target of 16,143. So this is how I'm going to approach Nasdaq as of now, okay. So approach for S&P, for Dow Jones and for Nasdaq are completely different. But anyways, what you can get out of this analysis is one thing, that equity market is telling you a different story, and the summary or the moral of the story is, Don't try to be over smart, don't try to be a smart pant in the stock market, and don't try to take unnecessary shot unless and until you are a professional and you know your pros and cons, because as usual people don't listen, they will never listen. So ego is like uh, just crosses behind the sky limit, beyond the sky limit, and it will go beyond the earth as well. Okay, they will lose money but they will never listen. So it's up to you, what do you think? And you need not to listen to anybody, okay, not to me, not to anybody, but believe in price, what you can see on the screen. And if you don't believe in price, I don't know what else you can believe. Okay, I'm not talking about all those flashy dreams which you have after taking the position, and if things are not going on your way, you start blaming to different things, different people, and at the end of the day your doormat as well. So this is the end of the video. Thanks for watching.